Hello, my name is Larry Word. I am a CPA with a master's degree in business administration from Mercer University right here in Atlanta, Georgia. The first thing I'm going to talk about is the types of businesses. The one thing you want to do in this life is open up your own business. That is the best way to save money on taxes. I'm going to be stressing that during this whole dissertation. Okay, the first form of business that we have is a sole proprietor. Now, a sole proprietor you can be a sole proprietor a business simply by just going down to the county, get a business license, open up a bank account, and run all your expenses and income through that, and you are a sole proprietor. So, what are some of the advantages of a sole proprietor? You get to deduct business expenses, salaries, interest, all kinds of business expenses, travel. You can deduct those as a sole proprietor. What are some of the disadvantages of a sole proprietor? The main disadvantage is unlimited liability. Someone can sue you and own your business, your house, your wife's car, your car. So that's a big disadvantage. Another disadvantage of a sole proprietor is if you need to raise capital, you're the only one who can raise capital. So you're dependent upon yourself to raise the capital. The second type of business we're going to talk about is a partnership. Now, in order to have a partnership, you simply have to just find somebody who want to go in business with you, and you all are partners. What are some of the advantages of a partnership? You get to deduct those same business expenses. And we're going to talk about the business expenses you can deduct in just a little while. What are some of the disadvantages of a partnership? Well, they say having a partner is just like having a spouse. So the spouse or the partner can really mess you up if they have bad credit and you have good credit. If they go get something in the partnership's name, you still can be liable for it. So you have unlimited liability as a partnership also. It's hard to raise capital also because you and your partner are the only ones who can get money. So it's hard for that. And you have limited management expertise too. Which is the best kind, is a corporation or LLC. Now, in a corporation, you have some of the advantages you have. You can have an executive bonus plan, and we're going to talk about that in a little while, which you can deduct your retirement savings from your income in your corporation, and still you can manage it. So that's one of the good things in the tax code. You can deduct all the business expenses, including some you cannot deduct in the partnership and sole proprietor, like medical expenses and those type of things. You have another advantage is you have limited liability. Somebody can only sue the corporation, and when they sue the corporation, they cannot sue your personal assets. So if they sue the corporations, you file a bankruptcy for the corporation, then you can start another corporation the same day. Donald Trump does that all the time. So you have limited liability. Also, it's easier to raise capital. When you see on CNN every morning about the initial public offerings, those are corporations raising capital from the public. So it's much easier to raise capital if you are a corporation. What are some of the disadvantages of a corporation? Basically, one may say that it's harder to set up a corporation, but it's really not that hard, and it costs a little bit more than a partnership or sole proprietor. But it's really not that difficult, and you can usually start a corporation usually for a couple of $100s or less. Another disadvantage is if you do something illegal in the corporation, they call it when you pierce the corporate veil, you can definitely be sued for that, and you can be personally liable for that.